Hi, I'm Dan with Pay Down Debt Solutions. Today we're going to look at someone who actually DM'd us through our YouTube channel. Her name's Regina, and she's in, I'd say, a little worse than a tight spot. Her monthly income total is $1,924. Her expenses are $2,070, which leaves her with a negative $146 cash flow. We'll break down her debts, but her total debts are $43,374, and she's got a $15,000 IRA. Her chargeable expenses, $632. Her non-chargeables are $1,438. There's a couple other things mixed in there. She's got an insurance, car insurance and life insurance. Neither of those two will accept a credit card payment. Just in case you do the math on these, you see they don't add up to the non-chargeables. But let's get into the big non-chargeables, the ones we're looking to pay off as fast as she can. So her car loan's $397, line of credit $215, Citibank $272, Citizens credit card $122, Discover $158, and TJ Maxx $70. She's not too bad, but there's a little hidden clincher in there. You'll see that made some of the calculations very hard. So I'm going to take you through all the options we looked at, but that wouldn't work. And they wouldn't work. Oh, we have a new light in here, and it's putting a nice big hot spot right on the screen. I'm just going to turn that off. You're just going to have to, well, it's probably better. You don't see me too clearly anyway. But option number one, we're thinking about using a portion of the IRA to pay down the Citibank card. First, using the pay down strategy, then the other cards. That was a no-go. That with the differential between her chargeables, non-chargeable, with her available income, she couldn't pay her credit card down. No matter which credit card we chose, it wouldn't work because she's already upside down her income. So that canceled out option number one. Her debts would actually increase. Option number two, we thought pay off Citizens. Because we already had an idea where to go with this. And I'll tell you what that little secret is in a minute, because we'll get to it by option 3 or 4. But we're like, well, let's try the smaller one. Right? And this isn't just for us. A lot of the stuff we just do in our head, we're like, nope, try it now. We don't even have to write it out, but I write it out and I do the calculations for you guys. So we're trying to show you guys how to do this on your own. So you don't need any help. So you can just do this, fix your finances, get yourself to financial freedom. So option number 2 was pay off Citizens and still use Citibank. And of course, we always you'll see me keep picking Citibank because it's got the biggest monthly payment. So that's the fastest debt we can pay down, going after that biggest payment. That was also a no-go. And the reason this looked like it might work, but I think it was option number 2 where we thought it might work, and it kind of was working. And I remember to go back to check her email. This right here, yeah. So you might look, this $150 payment, this 29.99%. Yeah, those don't mesh. The interest on this alone at 29% is like $177. What happens is right now she has a temporary 12.99%. But that's only for 3 more months, and that runs out. So this is actually go up to at least about $267 or more. $267 would be the interest plus 1% of the principal. So because of that Discover card, that little ticking time bomb just 3 ways away, that made number 2 not work. Now 3 and 4 did work, and once I erase all this and I'll show you how I break down how I did the best option for her, I'll put those up there. I'll put option 3 up there, the months and the interest, and option 4 up there with the months and the interest, so you guys can see a true comparison. So option number 3 was she's got this $15,000. Now we know early withdrawal, she'll pay a 10% penalty. That'll take her off $1,500 to $13,500. She's got to worry about the tax liability, so she's going to have to talk to her tax preparer or her financial advisor and figure out what it's actually going to cost her. So we can't use every penny of that. We're thinking more like $12,500 just to be safe, to make sure she has the money left in the bank to pay it. Hopefully they'll do tax withholding on it too, so she doesn't have to worry about, if something pressing comes up, one person you don't want to try not paying is the IRS, right? So where were we? So we take that, we pay off the car loan, $13,067. That flips that $397. That takes off the non-chargeable expenses because we're going to satisfy that loan. And we still use the Citibank credit card as our debt destroyer, as the revolving tool to pay down her debt. And that's still the best choice, that big number, that $272. So we found that took 42 months $9,891 in interest. I'm not going to break it down. I'm not going to break either of these down because there's a big overlap with the actual option we're going to recommend to her. We're going to provide her these. She's actually going to watch this video. She gave us permission to use her actual name and her information. It'll be up to her, but we think there's only one true choice to make. And hopefully by the end, I'll make that clear to her and clear to all you guys. So you see 42 months, $9,889 in interest. Option number 4 was pay off the Discover. Right? The second largest debt, that's a line of credit. So it's not technically the second largest debt, but the second largest credit card debt. We thought pay that off because right now it's 158, but in May it'll be at least 267. Jen messaged her and she remembers it was actually more like a $300 payment, so it would be 2% of principal plus interest. We'll use the 267 for now because this still be our best course of action, and that'll become moot when you see our best option. So we pay off the Discover. Use the Citibank again as a debt destroyer. 51 months, $10,677 in interest. And this, she actually got out of the credit card debt in 33 months. And in the meantime, the TJ Maxx got paid off making minimum payments. The line of credit, making that minimum payment of $215, that's where the 42 months comes in. Credit cards were gone in 33 months. 9 more months to finish paying off the line of credit. And it could be a little faster because, well, no, really can't be a little faster. I made sure to use the adjusted available income after paying off I smeared all my numbers to pay off that available income. I already adjusted for that. Pay off the Discover, use the Citibank, 51 months. In the 51 months, the TJ Maxx got paid off using the minimum payment, so that's your maximum interest. The line of credit got paid off. And I believe the car loan got paid off as well, just by making minimum payments. So the 51 months was really just to do the pay off the Discover, then use the Citibank, then roll in the TJ Maxx, then roll in the Citizens, plus the interest, the total interest paid in the car loan in that period, and the total interest paid on the TJ Maxx. I think I said pull it in, but same difference because until you pull it in, that's the separate interest that you have to add in there. So these are both viable options. She may choose these. That marker's toast. She may choose these. It's all about her comfort level and what her life plans are, what she really wants to plan on doing. So I'm going to cut away and I'll cut back. I'll put option 3, option 4 up here. I'm going to keep, if I have room, I'll keep these here. For now, I'll just step out of the way. I know I messed up the numbers a little. You guys can see the setup for the problem. And when I get back, the best option, our recommendation to her is. All right, and we're back with Regina's example. I kept option 3 and 4. Those of the 4 options I showed in the beginning, those are the only 2 that were viable. Here you can see I decided to keep the car loan, the line of credit, and the credit cards. So you guys can see them as I cross them up and how we pull them in to her debt destroyer. But this is our recommendation for her best option. And we know she was really hoping to use that. I was looking for what I already erased. She had $15,000 in an IRA. I know she wanted to use it to buy a house, but I don't know anyone. I don't know every possible buying scenario in a house. But with double the debt to, like almost a 2-to-1 debt to income ratio, and the fact she's upside down, she's looking at this long before she could buy a house. I think we can get her there faster. I think the pay down is going to get her to be debt free, obviously faster than those 2 examples. You can see how I set up the board, but not just faster, but once it's paid off with that increased cash flow, if she then starts saving that, I can't remember how it turned out. To be honest, I did it last night, and I just double checked my numbers this morning. She might be able to do it in less than 51 months, be debt free, take that cash flow, start saving it every month, and end up with more than $15,000 as a down payment on a house. So I got my trusty little notes right here to make sure I don't leave anything out. So she's going to pay off her Citizens. She's going to take her IRA. She's going to use that money to pay off the Citizens credit card and the Discover credit card. So these 2 are going to go away. It's a nice big chunk, right? So these non-chargeable expenses are going to decrease by 122 and 158. The numbers are relevant. The numbers are relevant because I'm not going to take you through the actual calculations this time. I'm just going to show you how we pick options, how you'll pick options. Don't be afraid to experiment. And I know it's a lot of calculations, but usually in the first 10 calculations, if you write them out and then you pick another option, you'll see. You'll see how much faster, excuse me, got a drooling problem today. You'll see how much faster that debt's getting paid down. You automatically know it's a better option. You know, what's the common saying now? It's not rocket surgery. It's not the simplest thing to do. It's, you know, it's not just simple 2 + 2. But if you look at any of the other videos, if you see how we break it down within, you carry that calculation out 10 months, do a year if you're more comfortable, you'll see real fast. One's getting paid down real fast. And it's going to be easy. You're always going after that, trying to go after that card. Not trying, you should always. It should always work out. And if it's not working out, maybe you're entering a number twice, meaning you got your debt listed twice. If you're upside down, there are cases where you are such a negative cash flow, you're gonna have to look at alternative options, right? She's negative, she's lucky she's got that IRA she can cash in. She's gonna pay off that Citizens Discover. It's gonna increase her available cash to pay down faster. So now let's get into the actual numbers of how this worked out, what I'm calling the best option. She'll pick the best option for her when she sees this video. So she uses the Citibank, right? That was her debt destroyer. She takes the Citibank card and she starts working the pay down. She's putting all of her available income, meaning all of her income that's left, minus the non-chargeables. Minus, she has 2 life insurance, I think it is, and a car insurance, or 2 non-chargeable expenses. And then these, her car loan, her line of credit. The Citibank is satisfied because we're using that as our debt destroyer. So that's another thing that comes off that non-chargeable. So the car loan, the line of credit, the TJ Maxx, and a couple others, she holds that money back. The rest of her credit card, now that 1924 was her total income, she's actually paid weekly. And Jen will break that down in a different video. I don't want to get that into here because I'd have to write a lot stuff that wouldn't fit on this board. And you guys don't want to see me stop and start it a million times. It'll bore you and work me to a bone. You know, trying to draw on a dry erase board. It's brutal. It's tough work. So let's get back to it. The Citibank credit card, she's using it as her debt destroyer. She's putting all of her available income, total income minus non-chargeables, onto her credit card. Then she's just living, putting her chargeables on it, right? So the Citibank card, after 4 months and $583 in interest, she's got the Citibank down enough to bring in the TJ Maxx card, to bring in that $1,773. Now, typically, her credit's not the best. Her credit's 626. So she might not be able to get convenience check. And convenience check, the fees, like usually 2 to 5%. I almost always pick 3%. If they don't tell me the number, I'll pick 3%. Not just because it's about right in the middle. Also because they have the option of using Plastique that charges 2.99%. So for me and for you, we don't have to do the calculations twice. You've got a fallback. If they won't give you that convenience check, you know Plastique's available. You don't have to redo the numbers. You don't have to wonder about, oh, great, now how long is it going to take? Now I got to worry about, this fees mixed in. Is it going to put me over 1 month? Don't worry about that. That's why I pick 3% when I get to pick. Right? So she used the Citibank as her debt destroyer. After 4 months, she's paid $583 on the Citibank. She's able to pull in the TJ Maxx. Right? So now that $70 goes away. And remember, this is a non-chargeable expense. Each one of these I'm subtracting is increasing her available cash flow, increasing her available money to pay her debt down faster and build up that purchasing power. Not just money in the bank. You can use your credit, just like we said, your chargeable expense, use the credit card for just about anything. So by paying those down, that's more purchasing power. They're not limited out, not maxed out, not near the limit anymore. She's got more room. So Citibank, 4 months. After 4 months, she's paid $583 in interest on that Citibank. Then she pulls in the TJ Maxx. Right? So that's $1,773. It's actually a little less, 3% convenience check fee. Right? The new balance, so in the 5th month, the new balance will be $7,920 on the Citibank card. Right? She paid it down for 4 months. She got enough room to pull the TJ Maxx onto it. Gave us a new balance, right? That takes 10 months and $849 in interest to pay that new balance after getting rid of that TJ Maxx, to pay it down enough to bring in the car loan balance. So we started with that city as the debt destroyer. 4 months later, we're able to pull in this TJ Maxx debt. It's gone. It takes 10 months. Now we're only 14 months into this. And I could, but I'm not going to give you the debt month by month, but I'm excited. I already know where this is going. I know exactly how many months it takes her to get debt free. I think you guys will be surprised. I hope Regina will be surprised. I hope she'll be very happy because I'm doing this example for her. Right? So she pulls in the car loan. The car loan, after 14 months, right? Because she's still paying that car payment the whole time. So the car loan, the balance has dropped to $8,141. And she's paid in that same 14-month period on that car loan, it's been $991 in interest. All right, that should be a slash, slash, slash. Right? Now that, once she pulls that in, now you're never going to use a credit card to pay off a line of credit. I say never. It's a relative term, but typically it's not a good idea because you're pulling that, I mean, look, 24.9, 29.9, even the 12.99, which is where this 158 came from, if you remember that from the first half of the video, is still a lot more than that 9.9%. It's about a balance thing. You really have to look at the numbers and how big the differences in the balances. That's for a different video. So here we are. She's 14 months in. After 4 months, she pulled in her TJ Maxx. 10 more months of making payments using that pay down strategy with her Citibank debt destroyer. She pulls in the car loan. And the car loan, because she was making minimum payments in the meantime on the car loan, that balance got down to $8,141. Excuse me. So now we're only 14 months in. We've gotten rid of the Citizens. We've gotten rid of the Discover. We've gotten rid of the TJ Maxx. The Citibank's marked off mainly for the payment. Let's say the original debt's gone, but we're using that as our debt destroyer tool. So we keep increasing it as we're paying stuff down. Look at that car loan, gone. She pulled that in. Now to get rid of the car loan, that takes 10 more months. Wow, 4? Sorry, I'm going to double check. Even though I did this and I double checked it, and I start seeing that all it takes a little while and I forget, and then I see the numbers. Yeah, no, 10 months. 10 months. And now we're at $952 in interest. I'll rehash. I've been rehashing it every time I do a step. I'll rehash it again at the end so you can see each of the steps, right? So now it's been 4 months, 10 months, 10 more, 24 months, so 2 years. Her cash flow has been freed up. Woo! Look at that. I could add it up, but I don't have to. I already wrote it down. So her cash flow has already increased. Not by, but I'll go to $1,088. We've gotten rid of almost all her non-chargeable debt expenses. Like I said, she's got 2 insurances she can't pay by credit card. Those aren't debts. Those are ongoing, perpetual, if you will, for insurance. So, oh my gosh. So, after 24 months, 4, 10, another 10, after 24 months, all she's got left is line of credit to pay off. Because she's paid off her Citibank. Sorry, we paid off the Citizens and the Discover using your IRA. We used the Citibank as the debt tool. We worked it down. We pulled in the TJ Maxx. TJ Maxx paid off. Then we went 10 months. Then we paid the car loan off using, like I said earlier, either plastique or convenience check. Right? 10 more months. She's gotten rid of that debt. $952 in interest. And then now she could take that cash flow and use it on her line of credit. Her line of credit only takes 2 months. Remember, this one, she didn't pull the line of credit over. She paid it off, paid the debt off, then started applying her new cash flow, her newfound positive cash flow, to paying down that line of credit. So 2 months, $35 in interest. That's terrible. Apparently I can't write backhand with a dry erase marker. There we go. Right. So what's the total? What's the total doing the option we gave her? It takes her 26 months. And she pays a total of $5,541 interest. Compared to using basically her whole IRA to pay down the car loan using the Citibank's 42 months. Pay Discover card off because that was the sleeper. This 158 is actually a temporary 12.99% that expires in 3 months, then it jumps up to 267 was my numbers. That's 1% of principal plus interest, or $300, which is what she remembers where it was at. But she's also been paying it down while she's got that temporary interest. 26 months, $5,541. Now, she lives, I don't really have an opinion how she lives, but I've seen enough people who are upside down, who are positive. She's frugal. She still does things for herself. I don't have to break down every individual. I'm not going to break down her chargeable expenses, but she put it in there. This much money, I treat myself. This much money, and I know, like this, it was like a Sirius XM or something membership. Like, yeah, so she likes music. But we don't want to call it the beauty of our system, but one of the built-in, the intrinsic positives of our system is we don't tell you to sacrifice everything. We don't tell you, hey, you're grinding, you're working, you got into debt. Shame on you. We skip the shame on you because we've all done it, right? You're grinding. Our message, we don't ever want our message to be to you, hey, why do we even exist? Give up everything you love. Pay off your debts. Yeah, so then give up your life. Give up everything you enjoy. I don't think anyone really does that. Some do. They can handle the Spartan attitude. I can't. I don't need a lot. There's a couple things I like. Like a car with heat. It's 10 degrees outside right now in Michigan. Stuff like that. I don't mind a beater. Actually, I prefer a beater because there's so many car accidents involving deer in Michigan. I don't have to worry about that when I'm driving a beater. But I do like heat. I say that because my truck heat kind of works. The air conditioning doesn't work at all. The kids won't ride in it anymore, which is also a bonus. I love them, but they never stop arguing. Okay, so what I was saying before, she's freed up. She's gotten debt-free 26 months, $5,541 in interest. She took out that IRA, right? Because she had plans. I told you she wanted to use that as a starting down payment for her house. And it doesn't break my heart. I hope telling her she's got to use it doesn't break her heart before I get through the silver lining. Not the silver lining. Let's just say why this is the best option for her. I don't want to sugarcoat too much. So I'll recap it one more time, and then I'll tell you the clincher at the end that I hope makes her day. So she cashes in her IRA, pays the penalty, the taxes, wherever that comes to. She uses that money to pay off her Citizens credit card and her Discover credit card. Right off the bat, eliminate those. She uses her Citibank as her debt destroyer, that big monthly payment, and now the largest credit card debt she has. Right? After 4 months of doing the pay down strategy, putting her available income, total income minus non-chargeables onto it, then just charging like her normal expenses that she provided us. After 4 months, she's able to pull in the remaining TJ Maxx balance because remember, for those 4 months, she's still making the minimums on the other thing. So she's making the minimum. She pulls that in, resets her balance on her Citibank to $7,920. She works that pay down strategy with that for 10 months. That's the first 4 months interest. This is the next 10 months interest. Then she's able to pull in the remaining car loan balance because at the same time, these 14 months, she's still making that $397 car loan payment. So the remaining balance on her car loans dropped to $8,141. And it comes with the $991 in interest that she paid in that same 14-month period on that loan, because we don't want to ignore that. We got to do a direct comparison between choice options. She does that for 10 months, another $952 in interest. Her credit cards are now gone. Her car loan, gone. She's almost debt-free, and we've got down to the lowest debt. So with that, just over $1,000 now in cash flow, it only takes her 2 months to pay the remaining balance of her line of credit. Oh, I do have it right there. So car loan, it should be line of credit right here. Sorry, I was too excited to jump to the end. So she brings the line of credit in. The line of credit had a remaining balance of $3,420, and the interest paid on that during that same 24-month period was $1,121 in interest. And with that excellent cash flow, $1,000 freed up, in 2 months, she eliminates her line of credit. And now here's why it's the best option. Here's the silver lining. Here's everything. This was the next best option that we found. 42 months, $9,891 in interest. We're at 26 months. 16 months, we'll make the numbers easy. $1,000 in cash flow, $16,000. In the same amount of time, she's right back to where she started. I'm sorry, not right back where she started. She is where she wants to be. Debt-free, the same value as in the IRA as a down payment on her house. She also, remember, buying a house doesn't just come with a house. It needs a lawnmower. It needs a weed whacker. You're going to want some type of yard furniture, maybe a barbecue. Even a hibachi now costs probably $100 or more. All little expenses, a garden hose. All those things that, if you're lucky, the homeowners leave you some good stuff. But most people take all that stuff. At least that's what's happened to me. I haven't done it to anyone else because I'm in the house I moved in and out of after college. I don't think we're going anywhere. But Regina, from Dan, me, from me and Jen, I hope this is what you're looking for. I really hope this helps you. I'm excited. I cannot. My mind will never forget things, especially these numbers. I'll be running these numbers through my head for 2 years, waiting to get a DM from you guys. From you saying it's working. I'm watching my debt go down. 4 months. Remember, we may have left this out. These are all best case scenarios, not unachievable scenarios. But what happens is we say 4 months. That's 4 months if you didn't need a sudden car repair, your water heater went out, things like that. You gave us the status quo. You're doing the status quo. It's going to pay you down in this amount of time. The beauty is if you have one big hiccup 1 month, if it's not too huge of a hiccup, you know it's only going to add a couple months. It's no longer, gosh, I'm maxed everywhere and I got a problem in my car. How am I going to pay to get fixed? I still have to get to work. I don't even have the money. Now do I got cash in my IRA to fix my car? Pay a penalty? Like it just compounds. It's worse than compounding interest. It's compounding problems. You can go to sleep and forget about interest. My problems tend to follow me in my sleep. But I'm Dan with Pay Down Debt Solutions. Always aligned, never alone. Regina, please drop us a DM. Let us know what you pick. Hell, give us progress reports. Jen really loves hearing them. She super loves it. I really enjoy it too. I love hearing how you guys are taking control of your own finances, and you're putting that money in your pocket instead of the bank's pocket. I gotta say it again. I just can't shut up tonight. I'm sorry. It's not that late. It's only about 6 p.m. I'm Dan with Pay Down Debt Solutions. Always aligned, never alone. Thank you, and good luck, Regina.